In today's video, we're going to go over the key differences between a pre-qualification and a pre-approval for a home loan. So if you find this video entertaining or useful whatsoever, please remember to subscribe to the channel, share this video with 3 people that you know if you think they could find good use of the information. So briefly, just about me, I'm Chris Carr, a certified mortgage advisor, a certified veteran mortgage advisor, as well as an active real estate investor. I've bought over 100 houses in the past 10 plus years, and I've done close to 2,000 loans. Okay, so I know a thing or two about creating wealth through real estate. It's changed my family's life, and my goal is to help you create generational wealth through home ownership and smart real estate and finance decisions. Okay, so the key differences between a pre-qualification, which is very preliminary, mostly stated information. Maybe you've seen things like click a button, get a mortgage, a 30-second pre-approval, something like that. All of that cannot be done with vetted information like a pre-approval can. All right, so the big difference between a pre-qualification and the pre-approval is that one is factual and has really minimum information or accuracy that's been verified, and the pre-approval on the other side is all factual. Income's been calculated, verified, employment, all that kind of stuff, as you can see on the screen now. So the real kind of quick big points of a pre-qualification, all right? It is stated income. You say how much you make on a quick application or a form online. You say what your employment is, or how long you've been working there, or any kind of gaps or things like that between employers. You say how much your stated down payment is. Oh, I've got 3%, 5%, 25,000, 100,000, no money, whatever the case may be. You estimate what your credit score, maybe it's a soft pull or no pull whatsoever, and you say what you think your estimated monthly debt obligations are. Now, the downside to that, the pre-qualification, one, at best, it'll give you a ballpark range of maybe what your budget is or what you can afford. However, that pre-qualification letter is significantly less credible to a seller. Most good agents won't even work off of a pre-qualification, again, because most of it's stated, not verified information. Allows you to have a much weaker offer because good agents know the difference between a pre-approval and a pre-qual. So the big things really is having a pre-qual, going out there and looking at homes. You might give your hopes up because you might envision yourself or your family in a certain home or environment that you might not be obtainable, or maybe you might be able to kind of have a little bit more buying power than you thought. So really don't want to get your hopes up when you're out there looking for homes to buy. The downsides to that, you can get under contract if the agent would accept a pre-qual letter or doesn't verify the lender or the mortgage originator that gave the letter. You might be able to not even qualify for that home loan because that upfront work wasn't done. And then lastly, that can create a big delay and a lot of stress in the home buying process if you've just given stated information, and then once you go under contract, it's time for inspections and home inspections, maybe septic inspections, other types of wood destroying insect reports. You got to schedule movers. You got to make all of these things related to the property. In addition to that, then you have to start submitting all your loan information to verify your assets, your income, your employment, your credit, letters of explanation. Everything that could come up through a pre-approval process could really slow down, impact the home buying process and create a lot more stress and uncertainty. On the contrary, a pre-approval means that the lender or loan officer has verified the income, not only just what you say it is with W-2s or LESs or pay stubs, figuring out if there's a portion of the income that's variable that has a different kind of calculation. If you're self-employed, do we have 2 years tax returns? Is there a trend upward or down of income? Is that income likely to continue in the future? Do we need to get verifications of employment or income? Have we verified any gaps in your employment, right? All of these little things could come up as a hindrance to the loan and home buying process if it's not done up front. So a full pre-approval will also verify your down payment sources. Do you need gift funds? Do you have access to gift funds? Do you have to liquidate retirement accounts? What percentage of certain types of assets can we use? Right? Do you have mattress money that's cash that needs to be deposited with a letter of explanation and things like that? Let us do our job, right? Think of us like a doctor. You go and tell us your situation, everything, so we can figure out the best path, program, and product for you. We are going to verify your credit with a hard inquiry, right? And you're not penalized shopping mortgage companies within 30 days. The CFPB does not want you to be discouraged to shop for the biggest purchase typically of your life. So shopping mortgage products is sometimes encouraged. Debt to income ratio is going to kind of factor in what programs you might be eligible for. So for us to figure that out on paper in our system to determine what that is will allow us to give you a pre-approval letter that's going to give you much stronger terms. You're going to have accurate rate ranges. You're going to know what your options are. You're going to know what your accurate payment is for a particular price range or for a property. We can give you closing cost estimates, loan fees, really set expectations within a pretty accurate range into what all is going to go into your home loan and closing costs for that purchase. The pre-approval letter is going to give the listing agent a lot more confidence in your offer, along with your buyer's agent going out there and showing you properties that you can afford and actually obtain and envision your family in. So you're not wasting everyone's time. You're out there, credible approval letter. A good loan officer is going to call the listing agent, introduce themselves, go to bat for you, and help increase the chances of winning the home that you love. Okay? So just in quick recap, pre-qualification versus pre-approval. Is the income verified? Is the employment verified? Are assets verified? Credit verified? What is the greatest chance of being accepted by a home seller? What is the best acceptance rate from the realtor? Is it factual based, and how accurate is it? All of these things come to play when considering a pre-qualification versus a pre-approval. A pre-approval is also going to allow you to close significantly faster because you're going to shave those 3 to 7 days off of the mortgage process by having the documents done up front, which again gives you more bargaining power, because closing quick usually is advantageous to sellers to make your offer stronger, and again set yourself above the rest with a higher chance to win the home you love. If you found this information useful, please subscribe to the channel and share this video with at least 3 people that you know. And of course, if you know anyone looking to buy, sell, or refinance, we'd love to count on you to send them our way. Thank you.